Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Happy Friday to y'all. I hope you guys have a wonderful, wonderful weekend coming up ahead. It's April 17th. We got a few economic news releases to go over today. We'll start off with the Consumer Price Index, otherwise known as the CPI, for the month of March. These are the headline number here. So we had a 0.2% back in February, and the increase was forecast at 0.3%, and it went up 0.2%. So we had a month-to-month increase in inflation. Now, if you strip out the food and energy, we get the core CPI. This is the number that basically the Fed will look at because of the volatility of food and energy. So the Fed likes to get a little bit more of a stable number by looking at the core. We had a 0.2% back in February and a 0.2% forecast, and we went 0.2% came in at forecast. So again, month-to-month increase of inflation, which is something what the Fed want because it's been a little too low for too long, and that's been a concern. This will probably go bold into their decision making when they go in towards when they're deciding their rate hike decisions. So the first meeting they'll potentially start talking about will probably be June. That'll be a very important date to stay tuned for. To continue on with the economic calendar here, we also got the consumer sentiment. So at a 93, the forecast is supposed to have a slight uptick, and they actually exceed that. So good news right there. Consumer index is up at 95.9. And we also got indicators, leading indicators. This kind of helps forecast as to where the economy is moving. So back in February, it showed 0.1 and increased a little bit to 0.2 in March. So good numbers are slowly increasing a little bit for leading indicators. This would be good. This is good for the economy. Stock market's down. Dow is actually down well over 200 so far this morning. A lot of it is they're not even looking at the data so much. It's all basically other news or like the new regulations being kicked in by the Chinese securities. They're tightening on their margin lending over there. So this is creating a global panic on the equities market or the securities markets on a global level here. Also, there's a lot of concerns still about a possible Greek default coming up here. As we indicated, the previous meeting back in I think it was February was basically all it is passing the buck and deferring it till a later decision, which we're coming to that point where they're gonna have to pay their default or have some type of resolution, and we're not at that point yet, and they're still digging in their heels as to these austerity measures. So again, this is creating more concerns out of the Greeks. So a lot of money is being taken out of the market. So money's even being taken out of the bond market. Looked at the treasuries are down, gold's down a little bit. So in general, everybody's being kind of hit with this. We're down probably about 1 or 2 basis points, not hit hard as we would typically be doing well in a scenario where stock market's down, but everybody's kind of being hit hard a little bit. So we're not down enough to be interest rates are affected, but pricing is slightly off a little bit, but not enough where interest rate we would have a dramatic change in terms of what the interest rates were. So we're basically about the same. Interest rates are about the same where we were yesterday. All right, folks. Hey, have a great upcoming weekend. I hope you guys enjoy yourselves, and we'll look forward to see you guys on Monday, fresh up a nice little relaxing weekend. All right, have a wonderful day, and thanks so much for watching, and we'll catch you again on Monday.